Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 3rd of April, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. Going to go for our usual run through in here today. It's all going to be about tariffs. Obviously, Liberation Day has come and gone. I don't know how liberated we all feel, but there we go. We've had it. So we'll take a look at the articles from the major news wires. I mean, nothing really to add. There's literally hundreds of articles being written overnight and this morning. So we'll run through, but I mean, there's nothing really to add apart from just watching for any kind of reciprocal sound bites, and anything we might get out of the Fed really to see. But I mean, we're not going to really know anything more. It's all going to be about how the market reacts today, and we'll talk a little bit about that. So we'll just run through and we'll have a quick look at the charts. The charts are pretty tricky in here at the moment. Obviously, my huge advice would be to scale back on your trading size. Why do we do that? Because the volatility is higher, so the market is likely to move more. So you're going to get the same reward, the same profit for a smaller trading size. A bigger trading size, you're more likely to get wiped out quite quickly and easy. The market's going to be choppy. It's going to be volatile. It's going to jump around. There could be liquidity pockets of lack of illiquidity pockets, even of lack of liquidity. So you may have a stop in, and it might not get filled at your price. It might jump. So just be careful is what I'm saying. Be a little bit more cautious. There are plenty of opportunities going to be out there, but this is not the place to be going in bigger size. This is the time to pull your size back, maybe to trade half the amount, because we've got volatility spiked. It's up. The market's already moved 3, 4, 5% this morning, so it could easily move another 3, 4, 5% in either direction. So who knows? A quick nod to the calendar, but the calendar is almost irrelevant when you get events like this, these larger geopolitical, macroeconomic events that kind of provide a stochastic shock to markets, and the data gets sidelined. Remember, this data is old data now, right? Because it's looking at what happened in March, and now we're in a different world. Post yesterday's Liberation Day. So, but for what it's worth, the most of the data in here for the European data coming in on the PMI data, services and composite data, PMI for France, Germany, and the Eurozone, better than expected. Slight misses on the UK data. We do get the same coming out this afternoon for both S&P Global and for more importantly ISM for the US. But how much this moves markets, I don't think it's going to move the markets too much in here, because again, these are surveys, right? And these surveys were based on not on what we now know, because we have more information. So 9:45 for the S&P Global Composite and Services PMI, 10 o'clock Eastern for the non-manufacturing ISM PMI data. So watching out for those, and anything we might get out from Fed speakers, anything we might get out for members of Trump's cabinet, or from Trump himself, So we're just watching for any further information, plus watching out for any kind of retaliatory. We're already seeing stuff coming out of Europe and out of China overnight. So, watching out for anything further on that as well. Because that's the risk. Obviously, then we get retaliation, and then the tariffs may go up for some of the tariffs that have just been put on. So I do want to mention here, you see the pop-up. We have please see how FAQ and price limits and circuit breakers given heightened volatility due to fallout from the liberation tariffs. I put that up this morning because some price breakers are when are put in place on the cash markets and the futures markets for when markets move aggressively. Now, I think the price breaker did kick in on the NQ, or definitely for the MNQ, I think overnight last night, where the trading is halted. So these price breakers are at 7%. Okay, so basically, if the market moves 7% on the cash and the cash equity markets and the futures markets as well, if they move more than 7%, okay, then trading is halted for 15 minutes, 15 minutes trading halts. And then if it moves to 7% and then 13%, and then if it moves to 20%, and if the market moves 20%, which I very much doubt it will happen today, but who knows? That's a proper crash. then the market closes for the rest of the trading day. But at trader, we have kind of a rule within that rule. So circuit breakers kick in at 7%. If funded traders are not permitted, so this is only funded traders. This is not if you're in evaluation. But if you are a funded trader, so either in a funded sim or funded live environment, you are not permitted to trade within 2% of a price limit. So, for example, at the moment we're within the 7% circuit breaker, it's price limit. So you cannot trade within 5%. So you must watch if you once the market moves more than 5%. You need to keep an eye on your whichever platform you're using. The percentage change on the day for the futures market. If you're trading ES and it's moved 5% from yesterday's close, if it's a 5% move, then you should stop trading. We are monitoring this. Our risk management team is monitoring this. Traders in breach of this, so these are funded traders, remember. So if you're a funded sim or funded live, if you're in breach of this policy, you will lose your account, your funded account. Okay, so please watch out for that because it puts us at huge risk in here. Because if you get caught in a position when the market locks out, if we get the circuit breaker kick in and you're in a position and then the market gaps massively in that 15 minutes one way or the other, then you could be on for a significant loss. And in the funded live market, obviously, that's a significant real loss. And even in funded sim, we don't want to see that behavior from funded traders. So funded traders, funded sim or funded live, please do not trade within 2% of a price limit. So at the moment, that would be 5%. But if we have trading halted and it moves again, and then we get the 13% limit, then it's not trading within 11% move. And then with respect to the 20% limit, it'll be of an 18% move. So at the moment, you're watching if the market moves more than 5% from the close, from yesterday's close, then you should not, or yesterday's settlement, then you should halt trading. And we are monitoring that. Okay. Sorry for the lecture, but I don't want anyone, not knowing the rules. That's why we put that pop-up up, and you should be aware of that price breaker rule. So here we are with the morning briefing America. Global stocks down around the world. We had a very volatile. I was watching it as Trump spoke last night. Initially, the market spiked higher because I think the market thought he came in and mentioned the auto tariffs, didn't mention anything else. There were rumors before that they wouldn't be as bad as previously as first expected. So stock indices were already up higher because of rumors, some leaks. And then when he hadn't said anything it was a good 15, 20 minutes in before he said anything apart from the 25% on auto imports. So markets were taking some solace from that and started to move higher. And then when he announced that there will be reciprocal tariffs around 50%, of the tariffs that are being imposed by other countries, then the market started to sell off into the futures closed. The cash market, remember, was already closed at this point. The cash market was already closed. And then the futures market closed an hour after he started speaking, and then when the futures market reopened, we went even lower. We gapped below the previous, so the prior sessions low, and went even lower. So we'll take a look at the chart shortly, though. It was all looking very negative. We have had an intraday rebound. So this overnight, the market has started to rebound. It's still way down on the day, right? But nevertheless, it has started to rebound. So again, I'm not saying this is necessarily bearish. We could have a significant rebound today. Okay, so you need to be just watching, see how. I think we won't really see too much happening now until the cash market opens. So watching for that cash market opens. I don't think those data points that we just covered in here, going back to the S&P Global ISM PMI data, I think they're irrelevant. The market's hardly going to move on those. No one's going to be really watching those, and this is going to be how we either see longer-term positions being liquidated or not, or whether it's short. It could be longer-term longs from real money longs, pension money longs. Are we going to see them start to liquidate and rotate out of certain sectors, or do we get some short covering coming in from the faster money? Maybe the hedge funds who have been short. Maybe this is it. It's a little bit sell the rumor, buy the fact. So the fact that the market's been selling off because of concerns about the tariffs from Liberation Day, now we get sell the rumor, buy the fact. So we could see the market rebound today. So I'm not ruling that out. Obviously, at the moment, it looks very, 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 very negative, but it could turn around. So I think you have to play this with a very open mind today. Not focus too much on markets moving any particular direction, very much focus on, going with wherever the flow goes. I'm going to run, most of this is all about the tariffs. I've just just literally opened up every tab, and all the links. There's in loads written, but it's all the same stuff. From friend to foe, Trump shows little mercy in new tariff blitz. Trump 25% US auto import tariff takes effect. Here are Trump's reciprocal tariffs, so they've actually got them all here. The reciprocal, so you see they're like kind of roughly around half of where we are, half of. So Algeria 59. That's what they charge the US. So the reciprocal tariff is around half of that. So now where they're lower, like it's kind of matched like for like. I know the UK was 10%, 10%, but it's the bigger where the bigger tariffs are. Like here, Cambodia 97%. 49% going on. The bigger tariffs, China 67%, 34% tariffs going on. So it's kind of around the 50% level. EU vows to respond with countermeasures to Trump's 20%, so 20% put on the EU and vowing to respond. China vows retaliation as well as Trump unleashes bazooka US tariffs, etc., etc. Stocks and the dollar lower as well as tariff shocks reverberate. S&P 500 stock futures tumble. It's all the same. Gold slides from record as precious metals join global. So it's kind of sell everything at the moment. The only thing that's really up are bonds. Bonds higher, but they've started to turn around as well. We'll come to the bond charts shortly. Stocks, dollars sink as tariff shocks reverberate. I think we've seen that one already. US emerges as biggest loser in markets from Trump tariffs. So the biggest moves down have been the US equity markets. So they're the ones that have moved the most. Those are all from Bloomberg. Similar stuff from Reuters. Trump tariffs trigger global stocks and dollar rout. US tech retail stocks lead rout after tariff shock, and the morning bid trepidation day after Liberation Day. And finally, markets rule as US tariffs stoke fears of spiral of doom to growth. No, that's positive, right? All negative in there. And if we look at the numbers, Asian stock indices overnight, Nikkei's down 2.77%, Hang Seng 1.52. In Europe, we have the UK FTSE down just over 1.5%. And the German DAX and French CAC around 2.5% or over 2.5% lower. And US stock futures this morning, the Dow down 2.78, 3.38 on the S&P, and 3.87 on the Nasdaq. Remember, watching out the 7% levels where the circuit breakers kick in, and we want funded traders not to trade at 5% lower. So watching out for those numbers. Actually, on the interest rate markets, this hasn't really changed a lot, and this is probably most likely due to the fact that. What are the Fed going to do? The Fed are caught, right? The tariffs are likely, almost certainly, going to be inflationary. So, i.e., the Fed shouldn't be too aggressive on cutting rates, right? Because they don't want to stoke those inflationary pressures. But equally, they're going to potentially cause a US and global slowdown, potential recessions in some parts of the world, potentially recession in the US. So they want to stimulate the economy. So at the moment, the Fed are like, what they to do? They need to wait and see, really. And that's why this one's not changed. The May one, this has been hovering. This has actually crept up to 20%, but there's very unlikely to see a rate cut in May. But we do expect now a rate cut in June. We've been waiting for this anyway. Only a 29% chance we're not cutting rates in June. And by July, it's kind of sitting around 50-50. You add these two up, it's 50%. That's like potential for either no or one rate cut, and it's 50% here for two or more rate cuts. Or not necessarily two rate cuts, maybe one bigger rate cut, 50% rate cut. Sorry, not 50%. A 50 basis point, a 0.5%, 50 basis point rate cut. So basically, the market now, by the summer, June, July, we're looking at least 25, maybe 50 basis points of rate cuts, which is what we were looking for before. And by year end, it's sitting in around here, 3 rate cuts, maybe up to 4 rate cuts, okay? The Fed are in a really difficult position in here now because they're caught between not wanting to stoke inflation because there's going to be potential, very likely, inflationary pressures, right? You put tariffs on, cost up, prices go up, right? It's almost by definition, prices are going to be going up. And inflation, remember, is not fully under control. It's not down to the 2% level the Fed want to see it at. It's ranging somewhere between 2 to 3%, 2.5% to 3%. So the Fed still want to be putting downward pressure on inflation. But equally, this is likely, the tariffs are likely to see retaliatory measures. It's likely to cause, we're in a trade war, whether we like it or not. And the trade war generally leads to lower economic activity, lower growth, and potentially recession, potentially contraction. And so all of that, then the Fed want to stimulate the economy, so then cut rates. So the Fed are caught in a really difficult position in here at the moment with potential inflationary pressures coming through and also potentially recessionary pressures coming through. And they have to wait and see what the data says, right? So they can't just guess and assume that this is going to be inflation, or guess and assume that it's going to be potentially recessionary and cause a slowdown. So they're going to be responsive to the data, and the data won't come through in any of this for maybe months, 1 to 2 months in here. So they have to be really monitoring the data, but be preemptive as well. So that's why we're not going to see a rate cut move in May, but we could see something by June, July. Okay, and on the interest rate side as well, we knew we'd see that we did see a move. We've been seeing this move lower in yields anyway, and again, market as a safe haven. This is, remember, lower yields means higher prices. People, the marketplace buying bonds going up higher in price. They went right the way down yesterday to the low yields posted back in here at the beginning part of March, and then overnight here breaking down to new low yields. But then you can see now tracking back to higher yields. So they kind of have this gap lower and then moving back towards higher yields. But nevertheless, this bid to bonds, and we'll see it on the actual charts in here. So we see in here like 30-year is actually breaking now up towards this 119.18 level in here. The 10-year broke above the previous highs and went even higher overnight. Remember, I did these reports were put together post-Trump. Okay, so I did this after the speech, going into the US futures close. So it was just before the US futures close this was done. So the markets in here were headed, and then have actually gone higher since then. So right away across the board, though, 30-year, 10-year, 5 years as well, breaking to the top side, 2 years breaking to the top side. So all the way, and this is a bid for bonds. Why bonds going higher? As a safe haven, right? They're AAA rated, backed by the government. So when all things go to crap, when things go bad, then buy bonds, right? And particularly US Treasury bonds as a safe haven. So bonds have been going significantly higher. And then equity is obviously lower in here. We did get that spike up, as you can see in the chart. We spiked higher. We look at the charts, we'll zoom in a bit more. We went right the way down towards the previous lows in here. But then, when I snapshot these were just going into the US futures close, but pretty much an hour or so after Trump started speaking, and then we actually went lower in here overnight, and we'll see that. I'll go to so here's the ES. We went all the way down, and then we gapped lower, went to new lows, but then look, we have rebounded. Now we're still negative we're way down on the day, and obviously we sold off yesterday as well. But then the market has there's still a little gap in here. I think minimally on the ES, it needs to close that gap. The high for today, 55.6475. The low, 55.66 and a quarter. So basically, let's just say between 65 and 66, there's a gap. Only a close of that gap then opens up more of a bullish tone, and we could then see the market try and get back a lot of what it lost yesterday. And here's the initial move. We actually spiked higher in here, and then all the way lower, and then gapped lower, and that gap's still in place. So that's the kind of area we're going to be looking at in here. As I say in here, we're going to be looking at the market to try and close that gap up through like 65, 66. Only through there staves off a more negative theme. If we break the low, we could be another 1 to 2% down quite easily. Okay, and similar story on the Nasdaq in here. So the Nasdaq, big spiked higher, and then big recovery failure down towards the old low, and then making new lows. But again, it's tried to rebound. There's no gap on the Nasdaq. So really, for the Nasdaq, what it really needs to do is clear above this intraday rebound high. So if I just go back to today's high, I think it needs to clear above that. If we can clear above the intraday rebound high, let me just open this up so I can see the level of the high in here. So the high in here for today, 19,177. I think it needs to clear that 19,177. If it clears the high there, if it clears this little overnight high up here, then we could start making some inroads. And then maybe you do a Marabuzo. So cast this from the top to the bottom as one big like kind of Marabuzo. And then we're looking for the market to maybe gain back half. So that would take us probably up towards like 19,400. I can actually just put that on like the whole distance, top to bottom. So it's going to come in around here, right? Let me just grab that. Going to come in somewhere around there. So 19,430 kind of area on the, that's if we clear above the high, right? And then it could get back half, right? It's going to be volatile. And then on the, let me just take a quick look at this. Make this a bit bigger. So you're looking at what's the top to bottom, the Marabuzo, you try to get back 50%, and so this could be where we go to. around there. So on the years, remember it's got to close that gap, 65.66, but then that could take us all the way back up to, so I'm just struggling to see that, 56, 25, 26 kind of area. So it could, it's going to be volatile today. We could easily see 2 to 3% back down. We could easily see 2 to 3% back higher. So just watching out. And that's why I say, guys, keep the your trading size small, right? The market's going to be moving twice as much and potentially twice as fast as you normally see it. So you can afford to easily trade half the size or less, right? Just be careful out there. All right, enough of the lecture. And remember to keep in mind those circuit breakers, right? The circuit breakers, if you're trading a funded sim account, if you're on the funded sim or the funded live, funded sim or live, particularly the funded live, do not trade within 2% of a price limit. So at the moment, that's if the market's down 5%, stop trading, please. Close your positions. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, be careful. Helmets and goggles definitely on today. Keep the trading smaller, and let's see how we go. All right, take care. Bye.